Good afternoon, everyone. Good afternoon. So I skipped the intro and everything, you guys, today because it's such a big show. I'm so excited. So, you guys, first I have to tell you, as I always do, please comment, like, share, and start a watch party if you're on Facebook. Those that are watching on anything besides YouTube, you're missing the party. The party's on YouTube, and the video will live in perpetuity on YouTube. So, Facebook, you can watch live, but it will come down probably in the next few hours. I am Dr. Renee. This is the Ask Dr. Renee show. And if you've never watched the show before, it's here to motivate and inspire you to live the life you deserve. Because let's face it, we have one life. And this is not a dress rehearsal. If you don't do what you want to do, you might blink and the whole thing will be over. So please, please, please live the life you deserve. I have had a whole lot of wonderful, amazing guests. We've had Michelle Williams from Destiny's Child. We've had Lisa Nichols, who motivated and inspired all of us and told us we are desiring to live the abundant life and we are supposed to. And so this is our 99th show, you guys. So next week is our 100th show. I still can't believe it. But today we have Victor Jones. I am so excited because I use his platform. I've recommended it to thousands and thousands of people. And so today we are going to hear his story and maybe he'll give us some tips too. Although the market was so red this week, I only opened Thinkorswim twice yesterday because I was so frustrated. But you guys, don't forget, comment, like, share, start a watch party. You guys know in YouTube, I have super fans. You can be a super fan. Draka, thank you. My coach Draka already has done her super fan duties. Thank you so much for the $5. But you guys, make sure if you have questions that you hit the button and tell me. I actually have my executive producer with me in the same room, so she'll make sure I get the questions and we get them answered. But Victor, thank you.
Oh, thank you. The pleasure is all mine. It's amazing to be here, and definitely type in those questions. Put me on the hot seat. Make me earn this money on a Saturday afternoon.
So, Victor, what did you want to be when you were growing up?
Ooh, that's a really good question. I'm going to tell you, I'm going to get real here with you and your audience. This isn't like, I wouldn't say this on, any other platform, but when I was really young, I remember it. I was in the 8th grade, and I remember looking in a math class at the back, there was this chart of all of the different professions that you could go into and the level of math that you would need. And I remember seeing, stockbroker, I remember seeing real estate, chemist, doctor, all this stuff. And then there was DJ. DJ had the least checks in the math column. And I was like, you know what? That sounds like a lot of fun. In a weird way, I ended up doing a profession that needed the most math. And I do this live YouTube show every single day. So in a weird way, I got the DJ thing, but then I also had to check all the boxes in math at the same time.
That is hilarious. That's hilarious. So where did you grow up?
I grew up, I was born in Battle Creek, Michigan, home of Kellogg cereal. My mom worked there for, that's right. That's right.
I'm a Michigander.
What part?
I'm in Michigan now. We live in Farmington Hills, Michigan, but my residence is in Chicago. I've been here helping my family out since July.
Yeah, so I was on basically the other side of the state in Battle Creek, Michigan. My mom worked at Kellogg's for 32 years. We transferred to Omaha, Nebraska when I was about 11. So my formative years were spent in Omaha, Nebraska. And I moved to Chicago when I was 23. I spent 2 years in Singapore living abroad. So I've been a little bit everywhere. But if you ask me where I'm from, I said Battle Creek. Where I grew up, it's Omaha, Nebraska at heart.
Awesome. But now you're in Chicago.
Now I'm in Chicago, Chi-Town, baby.
One of the best cities in the world.
The best. Come on now, Dr. Renee, the best.
I am a Detroiter.
Okay. I don't want those problems. Right, I've been to Detroit.
Exactly. So, Chicago is amazing. I've been living in Chicago since 2003. So I've been there a little while.
Beautiful city, beautiful people, and a beautiful city for sure.
Yes, definitely. And of course, the Chicago Board of Trade and all of that fancy stuff is right there in Chicago. Ninja Trader headquarters, all this crazy stuff is in Chicago.
I know we'll get to the story a little bit later, but one of the most amazing things is, at a certain part of this journey, when I was meeting with a couple of the board members, we were kind of deciding whether or not to form the company, meeting with some early investors. One of my early meetings was at the old Chicago Board of Trade. And it was the first place I went to when I got to Chicago. And I remember going in this building, and we went on the trading floor for a small tour. I was really young. and the energy on the floor, I was like, this is what I want to do. I want to be a part of this energy. And then to come back a couple, just a few short years ago and be discussing whether or not, we would get the funds for me to launch my own trading company in that very same building was absolutely surreal. Absolutely surreal.
I cannot imagine. So I tell everyone, and I keep saying I'm gonna watch Trading Places because that's the one movie they keep telling me
That's
to watch
right.
once I started trading. But I've seen, you see stuff on TV and stuff, and I'm like, wow. And then to be a part of it, it's so funny. We'll talk about a little more about that later. So, where did you go to college?
I went to University of Nebraska at Omaha, and I went there until my junior year. I was working at TD Ameritrade. I actually started at TD Ameritrade when I was 20 years old. So before, I could go into a bar
So you
or a
did
club.
interning or co-ops?
No. To jump right into it, I don't know how old your audience is, but like I found my job in the classified newspaper. I don't know if they know what a newspaper is, but it's this thing that used to they used to deliver to your house. And so it was a classified newspaper ad that said, TD Ameritrade at the time was looking for registered representatives. I'm 20 years old, and I literally, Dr. Renee, the only reason I applied was for interview experience as a 20-year-old. I said, like, I want to be in finance. I'm just applying for interview experience. Maybe I can make a connection with a hiring manager one way or another, and in a couple of years that could turn into something. That's the only reason I showed up. They call me back for a second interview. I'm like, oh, I don't know what they're thinking, but great experience for me. They call me back for a third, and they ultimately offer me the position. And the reason for that was they were going through a really big merger at the time, one of the biggest in the financial service space, and they just needed people who cared about people, who had customer service experience, and that were willing to learn. And I checked all those boxes for sure. I didn't have my degree yet and didn't have financial service experience, but I wanted to learn. And I remember, Dr. Nate, the first time I showed up in that building at TD Ameritrade as a 20-year-old, I knew somebody had just given me an opportunity. It was more than a job. It was a seat, and it represented an opportunity to change the direction of my life at the time, to change the opportunity of the future of my family, the family I didn't have, plus, my mom, my sister, and everybody else, my friends. And I remember it was a conscious decision that I was not going to waste that opportunity. And I spent 16, 18 hours a day as a 20, 22-year-old working on my craft with the hope that it would pay off. And I feel in many ways it has, and I'm really grateful I took that path for sure.
Wow. Okay, so you really were down with them from the jump.
Oh, from the very beginning. It's where I spent most of my formative years. I say I grew up in Omaha, and TD Ameritrade taught me how to be a professional.
Oh
So I
my
have a lot of respect for them.
gracious. So what was your major in college?
So I was going to school for finance. TD Ameritrade made a purchase of a company called Thinkorswim, which you mentioned, in January of 2009. So I was approaching my senior year. But I had talked to Tom Sosnoff and Scott Sheridan. I told them I wanted to be a part of their movement. I told them I wanted to move to Chicago. And they said, okay, we'll see if we'll see if you got what it takes to be successful here. They offered me a position, which means I left in my senior year. I left school. I just basically transferred from Omaha to Chicago. And I didn't finish. And people always ask me, like, how do you feel about that? And on one end, I don't quit anything. But on the other end, look, you go to college to hopefully put yourself in a position to be successful over the long term. And I think as long as you accomplish the long-term goal, that's the ultimate mission, right?
Well,
And
look at all
so
the
that
other
was
ones
my
who
journey.
didn't finish. The Apple guy didn't finish either, right?
Musk,
Bill
Steve
Gates.
Jobs,
Right.
Zuckerberg. Yeah, there's a lot. I wouldn't put myself
Hey,
in that
don't say
camp
that.
yet.
Don't say that.
I think I'm a humble guy. I'm a humble guy for sure. And growing up in Battle Creek, Michigan, in the way that I grew up, I have big dreams and big ambitions. Don't get me wrong, but I think the way that you build a great business is by being humble and always constantly evolving both yourself, your service, your offering, your technology. And the day that I believe I'm something that the day I believe I'm a finished product, I believe is the day that growth stops and the deterioration starts. And so I never want to be in that position for sure.
I get that because I just had a moment today. I asked somebody to be on my show, and when I tell you, I nearly jumped out the bed when they answered at 6:50 in the morning on a
Mm-hmm.
Saturday.
Mm-hmm.
And I just was like, oh my God. And they said yes. And I was like, And of course, people will be like, "But Renee, you've met Oprah and Michelle Williams been on your show,"
Yeah.
and I'm like, "No, but no, but she said yes." Like,
But
so,
that's that energy that people
right?
want to be around because you keep it fresh. You know, you create this amazing energy and this amazing show, and people want to be a part of that. And whenever you know, you get it, you get
Yeah,
it.
yeah. So you so with TD Ameritrade, I know that that's why you went to Singapore because you worked with them over
Yeah,
there.
yeah.
So how was Singapore?
It was amazing. It was definitely amazing. And I sort of say because I, you know, I got a lot of on the job training, right? That's why I went to Chicago early on, you know, and I didn't do the study abroad internship,
Right.
but I went overseas with a company to help build an international business. So you know, I got a lot of the same experiences that others would have, but I just did it on the job. Moving to Singapore for 2 years was absolutely, it was incredible for several reasons. On the personal front, which I'll leave out, but I'm happy to go there. On the professional front, you know, just learning other cultures, how the world outside of America views products, services, trading, um, also how they view our politics and all of that stuff was also interesting. I was there from 2015 to 2017, so it was during the 2016 election. So you can imagine there were some interesting conversations happening abroad. But it was incredible, and it allowed me. I think really there was a very small organization. There was only 12 of us working to build this international segment with a lot of help back home. But that helped me to learn how to build marketing plans and build education and build internal trading plans for you know, employees and associates. So I feel like I was able to cut my teeth on being an entrepreneur. I guess many people would call it an entrepreneur. So you're
Yep.
being an entrepreneur, but you're doing it inside of a bigger company. I think that was the opportunity I had there.
And so I know you have a little boy, and I know you're married. So where did you meet your wife? I always love a good love story.
I met my wife in Singapore. So she's Singaporean. My son then is, because, you know, I'm Black, Mexican, Irish, and Native American. My wife is Singaporean Chinese. So my son is, you know,
Adorable.
he's checking every box there is. Yeah, but we met in Singapore. When I came back in 2017, my wife came with me, and yeah, we've been together for around 5 years, married for 2.
Nice. So congratulations. And how old's
Thank
the
you
little
very
boy?
much. He is 14 months.
Oh wow. You guys can see
14
him
months.
on his Instagram page. He is adorable.
That's all my Instagram is now. It's completely transformed. The only thing my Instagram is a bunch of pictures of my son and my wife.
Yeah. So well that is awesome. And I lived overseas too. And I lived overseas when we didn't know who the president was. Remember
Is
when
that right? Where were you? Where were
I
you?
was
I'm
in
sorry.
St. Martin? Wait, yeah,
Ah.
I was in St. Martin, or was I in England? I can't remember. I've lived in St. Martin in England. I think it was in England when that happened.
So if you don't mind me, I do my own show where I ask a lot of questions. I'm
Yes,
going to
that's
play interviewer for just a second. What did you take out of the experience of living abroad?
fine. I I mean, I was defending myself all the time
Yes,
because of
that's
that
so true.
foolishness. I would say, no, I'm not like that. I didn't vote for him, because he's basically told. I go, I didn't vote for him. And it was
Yeah.
like every time I would get in a car I had private cabs that I would take. Every time they would hear me speak, and they're like, "Oh, you're American." Yes. I'm like, it wasn't me. I didn't do that. Now, when I lived in St. Martin, I will say, because my dad is West Indian and I'm accustomed to that culture, it wasn't that big of a difference. But what I realized at that age, because I had never been engrossed in it 24 hours a day, 7 days a week, was that my dad was amazing. And he got the best cards ever since then, because I realized what he did from
Hmm.
coming from where he came from to what he gave us and what we have today. I was like, wow. And so that was
Hmm.
my biggest takeaway, because I would look at the houses and be like, Dad, the house looks like water's going to come in it. And I was like, but that's where they live, Daddy. And he was like, well, Renee, and I said, okay. And then on the island of St. Martin, unfortunately, Black people didn't own anything. There was one Black man that owned a rental car company. That was it.
Oh wow,
I was like, the
wow.
island is Black people. How do we not own anything? And so that upset me too. And so we're Antiguan. And so now that I'm older and I'm creating my wealth, I'm like, we're going to figure out how to make sure that we have a hand and a footprint in Antigua, because that was crazy to me that these Black people came here, and just even in England, the first people there were the West Indian people and Africans, and you'd be hard pressed to find an African restaurant, or there was one West Indian restaurant in the town I lived in, and I went there regularly to help them out. They were Jamaican, but the Indians owned a whole lot of stuff, gas stations, grocery stores, and I was like, these people just got here, but they had the good sense to put it together and get it done. And that's what I always say about Black people, which is why, I know a lot of other people watch my show, but I always say this is why I try to help my people, because if we get together, we can do some amazing things.
That's exactly right.
Work together. And
it's also, go ahead. Sorry.
No, you go ahead.
Well, what I wanted to say, just to add on to your point, an amazing and beautiful, spirited point, which is ownership, how important ownership is, right? Like how important equity is. And as we're building, that was one of the things that I sort of got to the point that I realized, like, in order to build true wealth, whatever that means for you, it ultimately comes with ownership. And that can mean ownership in the company you're working for. That's what that can mean. That can mean, owning the property that you live in, the block that you live on, or it can mean, owning a piece of the companies that you are, you're vested in each day that you're consuming from. It can mean any part of that range, but ownership has to be part of the conversation in some form of fashion.
Right.
In order to truly build wealth.
Not an entrepreneur. So like you said, it could be owning a house or two or three, because you're not an entrepreneur, but you can own property. It can be, like you said, buy shares. If you're going to buy Nike shoes, which I wear Nikes every single day, I own Nike stock. If I'm going to eat at Starbucks, then I have to have Starbucks stock, just little things like that. That is the ownership that can really grow wealth. I probably will never own a Tesla. I'm not that interested, but I own Tesla stock. Now, on the other hand, I own every Apple product except for a watch. I have Apple stock. So little things like that, you guys, can help us to build wealth. So how did you come up with dough and say, well, I'm sure working at TD Ameritrade, you saw things and was like, I should do this.
Well, there was a couple of things.
Thinkorswim.
That's right. Well, there were a couple of things happening all at the same time in 2018. Obviously, there was financial disruption from some of the technology upstarts, and that was, starting to gain momentum in 2018. And it was also bringing a light to the fact that you could utilize technology. Financial services has been sort of this area that's been protected by this regulatory moat. So while you saw things like transportation get disrupted by technology, you saw hospitality get disrupted by technology with Airbnb, so on and so forth, you hadn't necessarily seen that in financial services, but you could tell the writing was on the wall and you could tell it was coming. At least that's how I felt at the time. But the focus at the time, and this is, no shade to that company, because it really, honestly, it got me to be in some amazing positions, and I had so many great experiences there. But the focus at the time was a refocus on people nearing retirement, or with people who had $250,000 of investable assets or more. And one, I was getting a little bit older. I was starting to focus more on legacy and impact. Two, I felt there was an opportunity that, like, hey, if we really rethink how we're using technology and scale, we can service a new customer who in the past, financial services never looked at as a valuable participant. Because what happens is they wait until you have the money and then they come and get it, right? But instead, there was an opportunity to say, with technology, we can service customers who traditionally haven't been looked at as worthy financial participants. We can do that at a lower cost. And because of that, we can be a part of the wealth building journey for a new generation, which ultimately means we build loyalty as we build our business and build our company alongside of the customers, instead of waiting for them to do it themselves and then trying to go get it. And now you've got to wait until they're 45, 50 years old. And by that time, likely they would have already built strong relationships with all the other technology upstarts that are building strong relationships today. So it just, to me, it intuitively made sense. Plus it made, there's a legacy element to that, with servicing a new generation of customer who didn't have the services or wasn't looked at as really a desired participant. So I was asked the question, if you were going to start a new application today or start a new company, what would you do different? And I said, simultaneously that the new technology upstarts at the time were exciting, they were refreshing, but because they were visitors in financial services, they didn't understand our customer. So if you've stood on stages and tried and helped explain how markets work to a couple, 5 people, 50 people, or 2,000 people in a room, you understand the questions that they have. Whether they have $50 or 50 million, the first question they have about investing, the first 5 questions are always the same. So unless you've done that and serviced the customer and answered their question, unless that's part of your core DNA, it's going to show. And I felt like the companies that existed at the time, their DNA wasn't about service, right? It wasn't about answering questions quickly, especially in moments of volatility when new customers, they don't have questions when the market's rising, which most of the last 13 years, the market's been rising. But the problem is sometimes volatility shows up. And when that happens, or when problems arise, people need quick answers because you're dealing with their money. So we live in a world, and I get it, the move fast, break things mantra works for, maybe it worked for Facebook. But in that scenario, you're dealing with social media companies. If you mess up, you're only breaking temporarily the connection from a person in LA and a person, in Singapore. And you can afford that. The problem is when you're dealing with people's money, you're dealing with their hopes, you're dealing with their dreams, you're dealing with their legacies, you're dealing with their children's college, you're dealing with so much more that you sort of can't afford to take a move fast and break things mantra. You can't afford to believe that customers don't need answers to questions. And you can't afford to believe that customers, no matter how experienced they aren't always seeking to evolve their own knowledge and experience in the marketplace. And I felt that was what was missing. And honestly, Dr. Renee, that's hard to sell. Because what you're selling is a connection with your customer. You're selling the idea that you can create a low-touch business with a high-touch feel. And people, they want to hear what algorithms you're creating and how can you generate more activity than the next person. Right. But luckily, we were able to find investors that believed in the same type of company and DNA that we believed in, and we've been off to the races ever since.
That is awesome. So Drake, I think we covered that. What made him decide to start Doe. Now, how did you come up with the name?
First, do you like the name? Let's start there.
And, I heard cool. I didn't even pay attention. I just was like, it's called Doe. Everyone's like, it had to be a black man. It's called Doe. I didn't even think of that.
That's funny. So in fairness, here's the story. I'm giving you all the inside baseball talk. So the story is the main investor in Doe, we're now a wholly owned subsidiary, but the main investor in Doe, they had started an app years ago called Doe. And they had that property, they had the domain name. And when we were thinking of names, it's not an easy thing to do. Thinking of a name that will resonate and that's available, it's not easy. And so we came up with a bunch, and I said, we all collectively said, we still have this property over here. What do you think about that? And it was sort of this moment where we all said, yes, absolutely. That's definitely where we should go. So that's how the name came to be.
I like the logo. It's like a piece of bread. It's cute.
It's very polarizing. So I've gotten feedback on both ends. We might go back to the drawing board someday, but I like it for now. It works definitely.
Yeah, I think it's cute. Now I told people, I posted on my Facebook. I said, you guys, this was right during the whole GameStop AMC week. I said, you guys,
okay,
you're having trouble on Robinhood because I had heard that they were like, nope. I said, you should click here and go to this app, Doe, because you can get in right now. I've done it. I'm looking at it. You can do it. And sure enough, we got an email from you guys when it did go down. It was like around 2:00 Eastern Standard Time. I swear to God, you guys, I got an email an hour later. It was back up.
That's right.
Whereas Robinhood, it was for days. And I said, you guys, I told you to go use Doe. Now, I love my people. I love them, but they crack me up. You had no problems downloading Robinhood, sight unseen, don't know nobody doing it, or whoever told you. But when I tell you, I read myself, people saying, "Oh, I've been looking at it, but I don't know anyone that uses it."
Mm-hmm.
But anyway, so then someone else had chimed in and said, "Well, I think Dr. Renee does," and I was like,
So one, I want to thank you so much because everybody knows how important word of mouth is, or recommendations from a friend family member, colleague, how important that is to the buying decision, whether that's in brokerage or whether it's in anything else. That's why we read the reviews on Amazon, right? That's why we read the reviews on Google, because, you know, there are strength in numbers. And so in a way, I certainly understand that. Like, if you're going to put your money with a company, you want to understand their background and reputation. And if you don't have 13 million customers, well, then, you know, you feel sometimes that you're taking a risk that you might not with other people. And that's why it's so valuable when people like yourself, who have such a big platform where so many people trust, when you put your word behind something, you put your word behind our company, it means so much. So I want to say thank you very much, first and foremost, for doing that. But the second thing is, you know, everybody starts somewhere, right?
Right.
Everybody starts somewhere. And the thing that I would like people to know about our company is everybody at our company was born in the brokerage business. You know, we've got people that came from Goldman Sachs, that came from, you know, E-Trade, Schwab, myself with 14 years in brokerage business at TD Ameritrade, as a product manager for one of the most demanding, you know, products in the business, servicing some of the most demanding and active customers in the business, in the world. So we're not visitors in this space. Whereas some of the other companies you're talking about, you know, this is really their first entry into the brokerage space. And this isn't to knock anybody. I'm just telling you, like, you know, while we are 2 years in and other people are 6 or 7 years in, we've been doing this our entire lives, and this is all we've ever done, and it's the only thing we've ever want to do. So it's how you characterize experience, I think, that matters.
And you know what I wanted to add? I forgot. So TD Ameritrade, because, you know, I day trade, everyone's like, what's the platform you use? We are like, we use NinjaTrader. And they were like, well, and you know, NinjaTrader is very much a Windows platform. So I actually bought a PC that I trade on. So some people are like, you can't trade on Thinkorswim.
Whoa. I thought you were an Apple person. What's going on here?
I tried that Parallels, and I'm sorry, Steve Jobs, may he rest in peace, but whomever, you need to get that Parallel so it functions properly.
That's very true. Very true.
It's not, and I mean, I thought, because when I first heard of Parallels was like 10, 15 years ago, I figured by now it was better. I'm telling you, we sat here for like 2 weeks and couldn't get it to function. And I said, it'd be cheaper for me to buy a PC and start trading. So, people are like, well, why don't you use Thinkorswim? Because, of course, I can have Thinkorswim on my Apple. And I said, because Thinkorswim has a very large margin when it comes to day trading, the ES and the ZB. And it's clear to me that they're not trying to have people like us trade with a margin that large. So I was like, Thinkorswim is great if you want to options trade, because they don't have that problem. But when it came to day trading, we were like, nah. And when you said that about who they were looking at to, you know, market to, that made sense. I think that they said the margin, somebody in here there's several traders sitting here, they'll tell it's like $5,600 for the ES. Whereas it's 500 on NinjaTrader. So,
yeah, and it's one of the reasons, you know, we partnered with the Small Exchange, which is another product of the Tasty family, and they essentially launched a new futures exchange where you can trade contracts, micro contracts that track the S&P 75, crude oil, gold, all your typical futures contracts. But the margin requirements can be as low as $250, and for some of the equity products around $500. So again, I think it's very clear in who we built our company for. It's who we're servicing, and it's in the DNA of the company and everything that we do. We understand people's financial position. But the flip side of that, Dr. Renee, if I could, during the whole GameStop scenario, it was a tricky line for me, if I could be honest, because on one hand, I do believe in free and fair markets. I believe, look, all I can do is help people understand the risk. But if you want to take the risk, it's your money, and I'm not going to stand in front of you. But in a world that believes in free choice, that means we have to own the responsibilities of that choice, right? So on one hand, I wanted people to know that we were about free, you know, access to markets. On the other hand, I wanted our customers to know exactly what I would have told my friends or family that asked me if they should be participating at GameStop at $400, at least at that time. And the answer for me was, look, if my friends or family didn't understand what a short squeeze was, if they didn't understand what a gamma squeeze was, if they didn't understand what short interest was before that week, I would tell them they have no business touching this thing.
I did the same thing.
Yeah, and if you don't know what 600% implied volatility means for a stock and what that could potentially mean for the risk and reward over the next 5 days, then just leave it alone. And if I'm wrong and it goes to 1,000, you miss out because of me, I'm okay with that because I know how markets work. I know the cyclicality of markets. But at the same time, if you know or you feel comfortable with the risk that you're setting yourself up for, then that's fine. Look, when I was 10 years old, my grandmother, rest in peace, she came and lived with my mother and my sister and I. My sister's 2 years younger than me. Every single day, she walked. She said, "I don't need a car. I got my 2 Cadillacs." We walked everywhere. She would walk us to the gas station. We bought a lottery ticket. Every single day we bought a lottery ticket. And then we went home and we watched the 5 o'clock news and inevitably found out the results today. Now, at the gas station, there was nobody asking her whether she was, what her net worth was, what her risk tolerance was, or whether she was financially suitable to buy a lottery ticket every single day. So I believe at my soul, because I witnessed that at 10 years old, and now knowing the probabilities of engaging in those types of activities, I believe markets are our best opportunity for wealth creation, but they're only great opportunities if we're willing to treat the markets with respect. If we want to treat them the same way we treat the lottery or the same way we treat a slot machine where we're just pumping in quarters, well, then the odds of our success are probably the exact same. If we're treating it as a shortcut to a different lifestyle, then I think the probabilities of success are going to be the exact same as those low probability outcomes. If we treat it with respect and as a long-term wealth creation mechanism, then our odds of success are greatly going to increase. And so in a way, it's like I want people to be participating in markets, and sometimes you got to lose a little bit of money to learn a great lesson. At the same time, I don't want people to lose money, and it's sort of a hard line. So I understand why some people cut off risk and they raise margin requirements, because at the end of the day, they really are trying to just prevent people from losing money that they need. But at the same time, if you are not afforded the opportunity to risk, if nobody afforded me the opportunity to leave my job and try and become an entrepreneur, if nobody afforded me the opportunity to leave my country and go live somewhere else for 2 years, if nobody afforded me the opportunity to leave my hometown, at 22 years old and go to Chicago, I might have failed. And I might have failed at all of those things, but I succeed because I fail. And because I fail small and try to win big, like everyone has to be able to I think most people should be allowed to be in a position where they can learn and grow from those learning experiences. And that's where we are. And it's a hard balance. It's a hard line, but that's where we stood. And we made sure that we tried to communicate that as best as we could.
Yeah, and if you missed the GameStop AMC thing, you ain't missed anything. But
see, it came back around too. It ran up to 150 a couple weeks later. So this fear of missing out, it's like markets do what they're going to do. There's always an opportunity, whether it's today in one stock or tomorrow in another one.
Exactly. Jay the trader is here. That's my trading teacher. That's who taught me to trade. And thank you, Jay, for the super fan. But Jay says there'll always be another trade.
That's right.
He's like, there's always going to be another trade. So, and the thing with the whole GameStop AMC thing, people were calling me because they knew I trade. And I was like, if you don't know, you should probably leave it alone. And they were like, well, are you? I said, no. I said, what I will do is I will purchase a put, because what goes up has got to come back down, and I'll catch it when it comes down. But right. I'm not going to sit there and put a whole lot of money in this stock praying that it goes up. And if it does, make sure I get out in time. And I said, and then look what happened. You guys are in Robinhood and they wouldn't let you get out.
Right. I always say, there's short-term money and there's long-term money. Right. And if you haven't figured out the long-term money equation and how you want to position it, then, it's not worth jumping into the short-term money. Once you've figured out the long-term money strategy, then it's like, okay, now I feel comfortable throwing a couple of dollars at something that I'm totally okay losing. But I would say if you're prioritizing and you're just getting started, definitely figure out the long-term money part of your portfolio first.
There's a lot of people that say, I'm up 150%. What should I do? I'm like, sell. I was like, Are you? And somebody did that right before close. And do you know, in the aftermarket, that thing plummeted. And I
Oh,
said,
they thanked you.
I
I'm
know
sure they thanked you.
she had sold. No, she didn't sell.
Oh,
I
they
know
didn't
she
sell.
wished she had sold. And I was like, don't be greedy, everyone. 150%. But take your money and go back in. You can always
That's
go
right.
back in.
It's that old cliche, you can't go broke taking profits, right? You'd rather be
Oh, I like
kicking
that one.
yourself.
Write that
You'd
down.
rather be kicking yourself when something goes higher than kicking yourself for not taking profits, and now you're trying to nurse something back to break even. So, I mean, um, we in our Trading with Strangers, stream that we do every day at noon, we sort of created this example portfolio, and we put rules in the portfolio so people could see Ryan and myself literally not just talking about these things theoretically, but
Right.
they could see us practicing it in front of everybody. And so we do things like no trade will be bigger than 2% of the portfolio. No position then will be bigger than 10% of the portfolio. And so we'll always take profits if we're up 50%. We do a lot of options trading, so 50% is not uncommon.
No,
We'll
not at
take
all.
profits at 50%. So we do a lot of those things, and we try to stay disciplined with it. And when people see us do it, you don't have to follow our numbers and our scope, because we're just doing it for example purposes. But at least it gives people a framework to utilize. I think people, like you said, you learn from somebody else. It's so hard to do, the markets are open 6.5 hours a day. It's so hard to just sit there and just try to figure it out on your own. It's so much better to work with other people for two reasons. Daniel Kahneman wrote a book about decision making and the perils of decision making. And one of the things that we do naturally as humans is we fall into different biases, one of which is confirmation bias. So we seek out information that validates an already established point of view. And one of the ways to guard against that confirmation bias is to work with other people, to seek devil's advocates. What's your point of view? I'm long, you're bearish. Tell me why. What am I missing? And that is so valuable in the world of trading. So many people want to get the newsletter from somebody and just follow them, sort of blindly. And that's okay. Look, I get it on, everybody can win here, but like using your own mind and your own ability to sharpen the risk reward tools and mechanisms, I think that's the true value that comes out of the marketplace.
Yeah. We had a question. Now, let me tell you, the person that has this question, Ashley House, is a beast when it comes to options trading. I've seen this girl make $25,000 in a day. She
Okay, Ashley.
is
All right. All right.
serious. Okay, so you guys need some guests on Trading with Strangers. This girl knows her options trading.
Okay.
So she's actually a buddy in the Build a Bag course that I took. That's how I learned options with Cassandra Cummings. So, what is Doe bringing to the industry that other companies don't already have?
Yep. So I would answer it probably in a couple of different ways. The first I would say is um, we want our customers to feel connected. I don't think there are many other companies that you could go open an account with where you're going to be able to participate in a live stream with the CEO, the chief market strategist, and all members of the senior leadership company every single day for 2 hours. I mean, it's unheard of, really. And the whole point was to create a community that the leadership. Like you can reach out, you can touch them, you can send them an email, you can connect with them on social. So I think there's an element there. I don't, but people, okay, are like, all right, I get that, but what else? Well, there's a commitment at Doe to education. We were talking about in December, because we do this and we've done this for a while. We were talking in December about interest rates, about rising inflation, about the potential for price changes in the first quarter, the 10-year to reach 1.25%, and what that would potentially mean for high growth companies, what the winners would be in the short term, such as small cap companies and the commodities boom, all of that stuff. I'm not going to say we're advisors, but I feel like we're pretty good. We have sort of the pulse of the marketplace. So the strangers who were listening to us, and by the way, Dr. Renee, they hated us. They hated us for talking about bonds. They're like, what's wrong with you? We should be talking about NEO. We should be talking about all of the clean energy companies. Why aren't we talking about Tesla? And we just kept drilling in this concept of inflation, what would happen when rates rose, and then what the impact to people's portfolio would be, because we knew I watch our customers' positions in aggregate. And so our education that we do is not just because we think it's the right thing to talk about. It's because I see the risk building in the aggregate portfolio. And I say, you know what, there's a lot of tech exposure here. They need to understand what happens when, not if, when the 10-year rises to a decent rate. And what have you seen play out in the last 2 weeks? You've seen interest rates rise, creating volatility and competition for markets. You've seen the discount rate change that's brought a lot of the technology companies lower. And so now all of these things that we were having, deep, informed conversations with our customers, not treating them like, hey, this is how you build a watch list, or this is how you enter in a limit or a market order. That's not the conversations I want to have at our firm. I want to engage people on a real level who desire a deep understanding of markets. I think if I've said this before, so at the risk of sounding like repetitive, but if somebody didn't know how to drive a car, right? And they said, I want to learn how to drive a car. You wouldn't go up to them and say, this is how you drive a car. This is how you open the door. Okay. This is how you turn the car on. And this is where the gas pedal is. That's not a meaningful conversation in order for somebody to drive the car. Now look, Ashley might not need that, right? Because she sounds like she knows what's going on. But the macroeconomic piece is just as important as the strategy piece. And when you can combine, I know what a double diagonal spread is, or I know what a vertical spread is, I know what X, Y, and Z strategy is, and I combine that with a solid macro point of view, now you're talking about something that you really can't get elsewhere with these conversations of, this is how to enter in an order, and this is how to build a watch list. That's maybe that's 1/10 of the picture that you really need to be successful over the long term. And I think that's what we do that nobody else is doing right now.
Now, for those that are new to this, please explain what exactly is an option.
Oh, okay. You want me to do it through an analogy? I always find people learn best through an analogy.
You do. Jay has a great analogy about shooting dice that helps us explain what we do for day trading. So
okay. So I like to go to the pizza one. The pizza one's always easy. I did a mask one the other day, which wasn't too bad. And maybe in the interest of the medical field, I could do something with the masks here. I'm going to try it. Who knows? This might bomb horribly. But let's say a box of these masks right now, they cost $10. Okay. They cost $10. And Dr. Renee, you wanted to buy these from me, but you didn't necessarily want to buy the whole box. In the case that the price went up, you just wanted to be able to participate. If you wanted to be able to buy these at 10, just in case something crazy happened, a new wave came in and masks were hard to get. We all remember in March of last year, it was really hard to get our hands on masks, toilet paper, all those things. So you just want to be prepared and want to lock in your price at 10. So you say, hey, Victor, I don't want to buy those masks, but I want the option to be able to buy them. So I say, okay, I write you out a coupon, I give it to you, and you pay me $2. You don't get the masks, but you have the ability to purchase the masks at $10 sometime between now and then the next 90 days. So if it doesn't happen, whatever, you lost $2. So let's just say worst case scenario, masks, you can't find them anywhere again. And the only way you can buy them is on Amazon, and they're $50 a box again. Well, in that case, Dr. Renee, you've locked in some profits here because you still have the ability to come back to me and you said, hey, those prices went up, but I locked in the ability to buy that from you at 10. So you could buy it from me at 10 and then sell it to the open market for 50, and you've locked in that $40 profit minus the $2 you paid me. So options are just basically a way to lock in your price on an underlying security, whether it's a stock, whether it's a future, whether it's a box of masks. And the reason you would do that is twofold. One, you just might want to lock in your price. Two, you might want to speculate that it goes higher, and you don't want to pay the full $10. You don't want to own the box right now and just wait for it to go. You just want to use less capital on speculating that the masks go higher. So options are effectively a way to leverage your capital and use less capital for an investment. The risk, though, is that the option expires, and that's different than owning stock. You own a stock, it goes down, you can wait it out in the long term. You could. Some people say you shouldn't. But when you own an option, once it expires, it's gone, you're out the money. It's a decaying asset, which makes it very unique and different than a typical security.
Yeah, I was trying to explain it to someone, and I was like, put it this way, Tesla's $700 some a share. I'm not buying a whole bunch of shares, but I can buy a couple contracts I could even get contracts for less than $1 even. But yep. And I said, in the way Tesla moves, in the next 2-3 days, I could be up 600, even 1,000%. And they're like, what? And I was like, exactly. And so I said, this is why I mess with options.
Yeah. There's a strategy that we teach a lot on our show. It's called, and this is no disrespect because I use this all the time. It's called the nickname is the poor man's covered call. It's a diagonal spread, but it's a poor man's covered call. And so just to give people an idea. So let's say a $90 stock, right? If you wanted to buy 100 shares, that's a $9,000 investment. If you wanted to buy 50 shares, that's a $4,500 investment. But on a $90 stock, we can show our customers how to get the theoretical equivalent of owning 50 shares, but do it for $600. So, I mean, that's what we do. We help people understand how they can use options to leverage their capital. And some people say, well, why would you? That seems like it's more speculative. And what I would say to them is, would you want to get 50 shares of something and pay $4,500? Do you think you have more or less risk by paying $4,500 for 50 shares, or $600 for the theoretical equivalent of owning 50 shares? I would say you have less risk figuring out how to only put up 600 and you can put the rest in cash, right? Like in a way, you actually have theoretically less risk for that 30 or 90-day period. But those are the types of discussions that we have with people to help them understand how you navigate a market like this. Like, some people might just want higher cash balances. And so I would say, okay, this is how you have higher cash balances and still get exposure in the tech names or the whatever the stocks that you still want with less capital. And you're actually minimizing your risk because you actually have higher cash balances. So there's lots of ways to use these instruments, and we try to talk about a broad array on our shows.
So where do you want to see Doe like in the next 10 years?
You know, before we actually launched, I did a podcast called Connect the Dots, and I was asked a similar question. And I don't think my answer has changed much. You know, it wasn't like I'm trying to build a unicorn company or I want to build a $20 billion company and be public. My answer was, this is a highly competitive space, and it's only going to get more competitive with the Squares and the PayPals of the world coming in, doing crypto and likely doing equities in the future, with Coinbase going public at $100 billion potentially, which is insane to me. But my answer then is the same now. If I can build a sustainable business which does not compromise on the values in which we started this company, and doesn't compromise on the customers in which we're trying to serve. If we can create a sustainable business that is exciting enough, that attracts investment, that allows us to continue to grow at a reasonable pace, that doesn't sacrifice support, that doesn't sacrifice our education, if we can continue, which, you know, we've hit all of our, you know, our KPIs and all the things. You sit down and you write out these models at the beginning of building a company. You get to a year or 2 years in, and you're like, that was pretty good. Like, we were just making up numbers and we hit them all. But I think if we can continue to make a sustainable business without sacrificing on the integrity and the values in which we started it, that's the goal. You know, if we can continue, we have currently 15 different people that work for our company. We've got maybe 40 or so that help us from the parent company. But, you know, those are 15 families that we're creating a business for, that have equity in our company, that have a sense of ownership in the mission that we're building here. And that means a lot to me. There's not a day that goes by, especially when you encounter these unknowns and not knowing about what's the right step to take with the business. How do you make sure you're making a decision that benefits both the employees, the customers, the investors at all times? It's not an easy thing to do, which is why a lot of upstarts fail in the first 6 months. So I'm proud that we made it 2 years, and I hope that we can continue our journey, and I hope that we can do so in a way where we don't have to sacrifice what our original mission was.
Awesome. Because I tell everyone, I want Doe to be the next Thinkorswim. I want it to be just as big, if not bigger. And, you know, everyone knows about it.
Yeah, I mean, for us, where we're headed is we're going to have the ability for people to trade risk in any way, shape, or form. In 2 years, we've already added stocks, options, futures. In a month, we'll have fractional share investing. In a few months after that, we'll have crypto investing, and a few cool things come in the back end of the year. We'll expand into new form factors. So right now we're mobile only. We wanted to keep our business very simple. When you keep your business simple, you don't add a lot of risk or complexities. But we're reaching a tipping point now where we can attract, you know, a more engaged customer like Ashley, who might need more than a mobile device in order to support her trading. So more form factors, web-based trading, and so those types of things are coming. And we're really excited to do that. And when we create that, now you have a situation where people can come to one place. Mm-hmm. They can get quick answers. They can get education. They can trade all the instruments that they want to, and they're participating in a company that they feel represents them in some way, shape, or form, whether it's age, whether it's, demographic, any type of the demographic aspect. I just think we represent something new, something fresh, something highly motivated, exciting, enthusiastic. And no offense to anybody out there, but I'm not a 55-year-old bald white guy that you would typically see leading a financial service company. And I think for many people, that's exciting as well. And there's a lot of pressure with that. There's a lot of responsibility. But I don't know that there's a better firm who's more prepared to do so.
I almost forgot. Did I forget it? I was going to ask you. Oh, I know. OTC.
Never.
Okay.
No, I'm just kidding. It might come at some point, but the hard thing is, building a brokerage firm, there's so many aspects, one of which is managing risk, right? And so when you allow for OTC trading, one, there's a bunch of embedded costs, which are hard for us, given our business models, to try to give as much away for free as possible. And number two is managing the risk of those securities becomes really much more difficult, much more involved, much more cost intensive. There may be a day, but that day is, I'm being 100% honest, we try to be transparent. It's probably not in the next 12 to 24 months.
Okay. That I just wanted to know, because we have some penny stockers out there that
I get it.
Yeah,
I get it.
they're always asking, well, where can I actually purchase them? But crypto is good too, because I actually I got me a little Coinbase, but I'll do Dough as soon as you guys have it. Because I need to get a lesson and understand, because I put like $5 in there because I don't know what I'm doing. And I was like, I'm not putting money in something. I have no idea what's going on. I don't care how much high or low you guys say it's going to go. I don't know, and I don't understand. So
we could do a whole show on crypto if you wanted to. Yeah, that would be a lot of fun.
I do have to get that understanding. I understand. I do have to get that. But you guys, please, if everyone here, one, you need to follow Trading with Dough. That is that's everything. YouTube, Instagram, go and follow. And Trading with Strangers, hit the notifications. They go on noon Central Time, Monday through Friday for 2 hours. And I'm telling you, Ryan explains things so well. I have watched.
He's a monster.
Yeah, he does a great job of explaining things. And if you guys didn't pay, some of us, a lot of us here we call ourselves stiletto bullies, because we are part of Stocks and Stilettos, and we're bond bullies. Stocks and Stilettos is where we learned how to options trade. Bond bullies is where we learned how to day trade. And so a lot of us, we did pay for a course, and we did that. And of course, when you pay for a course, you get a little more hand holding. And so
that's right.
Some people need that. But
that's right.
You don't. I'm telling you, I watched the videos, great information. So what do you think? I'm just going to ask. So what do you think this week is going to be like? Because last week and the week before was just so sad. And I, full disclosure, we all know you can make money going up and down. I just was like, I still have a put on GameStop. It's a 2022, January 2022. So I'm just one night I had went up like 75%, and then by the time the morning came, it was back in the red. And I was like, okay, well, we'll just wait.
So look, I don't know what happens week over week, but I will say this. I think higher interest rates are going to be here to stay unless we have something catastrophic that really shuts down our economy again. And if that's not the case, the reason interest rates are really rising here, there's several, but one main signal is just because there's growth in our economy. And when there's growth, the yield curve steepens, and that's what you're seeing. But when that happens, the 2020 stars are going to have a little bit more, I think, a little bit more volatility in 2021, and I'll explain why. One, you have higher interest rates, and that makes high growth stocks a little bit less interesting. It doesn't mean they're not interesting. It just makes them less interesting. So if they had really high valuations, they might need to come down a bit before you see, meaningful growth higher. Otherwise, they'll just chop around. The second reason is if you think about it like this, and I'm sure you guys have talked about this, but like, the things that were most beaten up through the pandemic, they're now going to have really easy year-over-year comparisons when they go and they report their earnings, right? So now it's like jumping over an envelope. It's really easy to do. It's like, yeah, we've had massive growth in our business. Well, of course, because a year ago you were literally doing nothing. You were flatlining. But the opposite is true for all of your 2020 stars. So your 2020 stars, when they started ripping and running, your Amazons, all your e-commerce, all your sort of clean energy,
Yeah.
or your Zooms of the world, remember, they're going to have a harder year over year comparison because they shot up like crazy because the world had to, there was like concentrated activity into just to a handful of things that were happening online. And so that's going to create tough year over year comparisons. So I only say this to everybody because I think there's a lot of participation in tech stocks. It's not that I don't think tech is great or going to continue to have decent performance, but I think you have to understand that you're going to see much more volatility in 2021. I think buying the dips has always worked for 13 years. And what that can do is it can condition people to say, oh, I put 1,000 in last time it was down 2%. Now I'm going to put 2,000. Or I put 5,000 in last time. Now I'm going to put 50,000 or 70% of my portfolio. And what you need to, I think, respect is that markets don't always work like this, right? They don't always work where you only get one day of 2% and then 5 straight days of going up. You want to be able to weather a little bit of storm. So if 5% kills your portfolio, that's probably not a great place to be. You want to position yourself for a little bit more volatility, especially in the tech names, in my personal opinion. Oh, and in GameStop, I'd be careful there as well because there's not as much short interest this time around. Last time, that run was short interest. This time it has high short interest, but only 40% relative to the 140% it had last time. So there might actually be some sustainability in some of these runs this time around, and less so than last time. Do I believe it's a $150 stock? I don't think so, but markets can do what they're going to do, so be careful.
That's true. They can. So if no one has any other questions, you can throw them up if you have them. But one, I have to tell you guys that my friend started this wonderful website that he asked me to be a part of, and I was so excited. Another black man, of course. It's called Squirrel It. So Squirrel It launches. It launched yesterday. So today's the 27th, right? Yeah. So it launched yesterday. Lovely for Black History Month. I will tell you a little bit about Squirrel It when I find my notes here. Here they are. Squirrel It's a black-owned interactive business directory whose mission is to deliver the latest information about black-owned businesses within the Chicagoland community. Business owners can claim and customize their page to improve online visibility and marketability. Consumers can select a service category, identify a specialization, access real time company profiles, and read reviews. No more emailing, texting, or calling friends asking for a referral, or do you know someone who can install drywall or prepare taxes? So please go check out Squirrel It. They are Squirrelit, SQUIRRLIT.com. And it's Squirrel It on Facebook, Twitter, Instagram, and YouTube. So shout out to Renel DeShazer for creating Squirrel It. I am very excited to see how things go with that. He look, it'll end up being a huge app. Watch. But
Well,
everyone in the
they just got a new follow from me for sure.
oh, awesome. So everyone is posting in the chat how they love Doe. So I'm glad you guys are on board because Doe is, I'm telling you, it's really cool. I didn't, you have to apply. I get just like every place else, you have to apply to get options. So then I got options. So then I bought some options over there. But you have to do that on all the platforms, you guys, you'll see. And just like he was saying, they ask you, the lottery lady does not ask you your net worth and stuff, but when you do apply for these brokerages, they do ask you these things and your risk, and all of that. So it's when people were first doing it, they were like, wait a minute, what? And I was like, that's just what they do. So you have to answer the questions if you want to use the platform.
And I only bring up the lottery comparison because I feel like if we're gonna care about financial suitability, let's care about it all the way, right? Let's protect people in communities that aren't participating in markets but participating in low probability. And I'm not, I have nothing against it. If we want to allow it, let's allow it. But then let's also not make it really hard for people to be able to participate in markets. So it's like we gotta be on one side of the fence or another, I think, with this.
Definitely, definitely. Well, thank you so much for your time today, you guys. Thank you, thank you. Please, if you're watching the replay, thank you for watching the replay. If you have comments in the replay, please put them there. I will respond to them. And make sure you guys have hit the notification bell so you do not miss when I go live, because I actually do some Dr. Renee's remedies and I come on and chat. Thank you. Yesterday, I actually hosted, I moderated a panel with Anthony Hamilton, DMC from Run DMC, and some two lovely physicians, Dr. Williams and Dr. Morgan. and Dre Davis and Emil Wilbekin, and we talked about COVID vaccines. And you can watch that video. That is the latest video I uploaded to the channel. So please check that out. We gave great information so that you all can understand why you should get vaccinated or why you shouldn't, because maybe not, maybe you shouldn't, but please make sure you check that out. And then also next week is the 100th episode of the Ask Dr. Renee show. I cannot believe it. So next week, you guys, for those that are cousins, Jolynn GC will be right here on the Ask Dr. Renee show. So make sure you tell the rest of the cousins to come because she is going to share her story. And I'm so excited. This will be her by herself. So no Mark, but she will share her story. And I'm sure she will also have some long-term option tips for us as well. But you guys, please tune into Trading with Strangers and learn these options. I'm telling you, your children will probably pick it up faster than you. So let them watch because you can buy an option contract for a penny. I'm not joking. You can buy them for 2 pennies. And you can get your children started. Does your app have anything? Because I know there's a lot of parents are asking. That was a question I knew I wanted to ask you. If you were going to teach kids about stocks, what would you suggest somebody do?
If you're going to teach kids about stocks,
yeah, like what app or what program? Because somebody was saying they were going to do an investment club. And I said, my only thing with that is you're tying everyone's money together. I think you should individually teach them. And they, have their $5 or whatever.
yeah, I think, I can only speak from my own experience. And I think I learned best from experience. And I think now, if I could, the fact that you have fractional shares, you can invest so little and actually feel like you're participating, to sit down with a young person, talk through different companies, whether or not they're familiar with it or not. You'll hear this a lot out there, like buy companies you're familiar with. Well, it's not. We say that's only half the picture, right? Like knowing that you like Nike shoes is one thing, but now let's get involved and let's start to understand the other side of that picture. And so my thought would be sitting down, buying $5, $10, $15 worth of a stock. You're going to learn more about that because you're actively engaged, you're participating. And once somebody sees that $5 can turn into $6, they're sort of hooked. You show a young person that you can put $5 in, you can make $7. And the only thing that changed was your opinion in the ownership of a company. It's a really magical moment. So I think active participation, whether it's a young person or whether it's somebody who wants to get started, it's like the key to unlocking markets is to get in there, roll up your sleeves and participate.
Now I know I have a friend that I told her about Doe, and her son was so excited, and he's 16. So I think they had to open the account for him.
Yeah, so right now we open individual taxable accounts only, which means you have to be 18 or older. Our next, where we're headed, where we'd like to head is, IRA accounts. And then following that, because our average age is right around 31, so our generation's now getting to a point where they're married or maybe they're having kids, they've got a couple of kids. So now the questions that we're getting are, how do I prepare for, my son's future? And so I think that's the next logical progression as well, to create UGMA, UTMA accounts so you can open up account for younger people, whether it's your son, daughter, or niece, nephew, whatever the case may be.
Awesome. And so you guys get open the account for your kids in Doe and teach them about this. I have a friend, he is 8 years old, I do believe, and he bought Apple stock, and now he's up almost 50%. And then Roblox IPO is coming out March 10th. So we think that he may be purchasing that too. I'm going to talk to him about that and see what we can do. But definitely, you guys, this is what we all need to do this. And it's so crazy in 2020 that all these Black people are having this discussion. It excites me so. And so that's why I'm excited we're having Jolynn. I'm excited we had Jay. I'm excited we had Cassandra. And next week, I will see you same time, same place. Don't forget. And please, you guys, in my box below, you can click the link and give me free stock too. And you can know. So don't forget, please do that. And I'll see you guys next week. Thank you, Victor.
Thank you so much. Appreciate it.